Welcome to another episode Between Dollars to Dreams. We're happy to be with you here today. Pierre is all filled up with turkey after Thanksgiving. We are going to, of course, keep you updated with what's happening with the news. Newsworthy week, I guess. First,
Blue Jays win!
Oh my God.
Blue Jays win!
Oh,
Yes!
The crazy has come out. Yeah, the Blue Jays winning. So what's next for them?
All the way.
All the
way to the World Series. It's going to be like 92 and 93 all over again. Some of us were born in the, I don't know
Some
if you
of us
were
were
around.
being a thought. So
in the 90s,
So
right?
it's been a
So
long
history
wait.
was going to repeat itself, 92 and 93.
it just took 32 years.
For it to happen. So, hey, it's like a cycle, right? So
That's
we're
correct.
seeing the markets are going up, but
Right.
we also know that things happen in cycles, and history tends to repeat itself. So what do we know about history? We know that a lot of times corrections, crashes occur in the month of October. Not to say that it's going to happen, but if history is any indication,
yeah.
October
a
is
likeliness.
poised. Yeah, definitely.
So the markets, we've seen the U.S. and Canadian dollar fighting this week. So with that reaction, the banks have also been affected. So the banks have been going up and down in terms of their stock price.
Yes.
So we'll see how that unfolds. There is an expectation as well for the banks in terms of interest rates, maybe going another, quarter percent down, but we don't know.
No, we don't know, but I wouldn't bet the house, but I'm pretty sure.
You're pretty sure?
I would go 1 foot in, right? I wouldn't go all in at the casino, but I'm pretty sure that they're
all right.
That they're
I'm just gonna put a hand in. I'm not sure about it. I think they're just going to let the year play out. I know the budget is gonna be in
November.
Yeah. So instead of in the new year, so maybe that is also an indication of maybe just pause. Let's see what's going on. Because inflation is still an issue with the tariffs. The meeting did happen. I am not sure what happened from the meeting. I'm confused.
I'm confused. The only thing I know is that they met, and my coffee is 2-3 cents more now.
That's right.
My Timmy's that you graciously bring me all the time is costing you, maybe not costing me,
since
2 or
the
3
prices
cents
are going
more.
up, he's asking me to buy the coffee. This is crazy. So
this is budgeting 101. Using other people's money to make money.
So the price is going to go up. We do see that when inflation kicks in and prices do go up, they don't tend to come back down. So this might be the new norm.
That is
for coffee prices. So
and we're seeing Starbucks. So if you're buying Starbucks
spoke about that last week.
So coffee prices are going up, and as a result of that, Starbucks, it's more of a not necessarily a need, but more of a luxury type of item, and so we're kind of seeing them kind of retreat and closing some stores because of the high prices.
Yeah. So this is where again we just have to now adjust our investments, adjust our saving plans, just to cater for these effects of the tariffs. But you look at.
You're right, but sorry to kind of interrupt, but if you have a plan, and whatever we did at the beginning of the year took into consideration a whole bunch of events. So whatever your plan was, these tariffs, these discussion, markets going up and down should not have truly an impact on your particular financial plan or investment plan. Yes, you're right. We may need to do some adjustments here and there, but when I look at my plan for myself and family, I haven't made any changes.
This brings out an interesting point for me. I was looking I was talking with someone, and we were looking at a 10-year span or even a 20-year span from 2014 2014 to 2020. It's 10 years, right?
2014 to 20
Oh my.
to what? To
To now. To
2025?
now. It's
It's
10,
about
11
12.
years.
It's about
So,
12
oh my
years.
God, my
Yeah,
man is so
that's
bad.
okay.
Anyway,
That's okay.
it's okay. It's a
Yeah.
good thing I'm not working at the Statistics Canada.
Canada, yeah.
All right. So basically, what we're looking. The point I'm making is, if you're looking at a long-term plan, 10 years, 12 years, of course, when we looked at the graphs, the numbers, we did see like GICs and T-bills, they didn't beat inflation.
No.
But the mutual funds, those segregated funds, those, and of course stocks, equity, even the U.S. equities were even higher. They all beat inflation. So if you have a long-term plan, of course, you're gonna talk to your advisor. You're gonna have to assess your risk and determine what's the best approach for you, because inflation is a factor. So GICs are usually short term. You want to lock in your money. You don't want to lose your principal. But if you have a long term plan, maybe GIC is not the answer.
Yeah.
That's just something I observed just in real time, having a conversation.
You're absolutely right. Most people, when you invest in the markets, you're investing in the market to do two things. To one, beat the rate of inflation, right? Maintain your standard of living, and also beat the GIC or T-bill rate, because that tends to be what is known as the risk-free rate of return. So this is a rate that you could expect to get. So if GICs are giving you like 2% like it is right now, for me to invest in the stock market, I have to make more than 2%.
That's
right. And we're seeing the markets, double, triple, quadruple, 10 times, 10 times that, depending on which market. So it is beating the risk-free rate of return and also inflation.
And then an interesting point we made is that the people who run the funds, they're being paid to beat inflation.
Exactly.
Right? They have to, because if they're not performing, then it doesn't make sense to have that fund.
Exactly.
Right? So it's because it's interesting that when you look at it and you just pull back and just look at the big picture, it just makes a whole lot of sense of your, when you look at your long-term goals.
You're right. I mean, you make a good point. This week it's funny because this week in my class I'm talking about mutual funds with my in one of my classes.
It's like I never left.
I know you've never. Yeah. And one of the things talk about the advantages of mutual funds and segregated funds is the fact that you have these portfolio managers, right? These smart men and women that have CFAs, MBAs behind their name. And you're right. That is their job, is to beat not only inflation, but to definitely try to beat the stock market, the return of the index. They don't always do a good job of that, but at least they do beat the inflation and the GIC rates.
Yeah. So I know we're getting into that, but it's newsworthy news episode. So let's continue with news. Speaking of prices going up, gold prices. What is going on with gold? I should have bought. I come from the country where it's called the land of El Dorado, where you have the gold in the ground. I should have gone to the.
You didn't listen to me.
The jungle. Got myself some gold and kept it.
Yeah. So gold is always a good investment. I mean, not going all in, because gold is, as we talk about inflation, it's a hedge against inflation.
Right.
And right now gold prices are through the roof, right? So we're seeing
record 4,000.
4,000. Wasn't that long ago, right? Maybe a few years ago that 2,000 was a big number. Now it's double that, right? So is it going to continue to rise? Who knows? But one of the things they talk about gold is kind of a safe haven when the world goes to hell in a handbasket, which it is. People kind of gravitate towards something tangible. Instead of fiat currencies, they tend to gravitate to tangible precious metals, and gold being the biggest one.
And a cheaper alternative, silver, tends to move in correlation with in terms of if gold is going up, silver will follow, lag behind.
But not to the same extent. We're still awaiting the big silver rally. It hasn't happened, but who knows? It is a cheaper alternative than gold right now. So if you are not able to buy 1 ounce for 4,000,
Mm-hmm.
you could buy precious metals mutual funds, or
Mm-hmm.
there are some gold stocks like Barrick,
Mm-hmm.
B2 Gold.
Yeah.
Those type of stocks have done well. Now, have you missed the boat? If you're looking for a 1 year, 2 year return, you
Yeah.
may have missed the boat. But
Yeah.
again, if you're there for the long term, then yeah, it will continue, hopefully, to rise over the next 5 to 10 years.
All right. So I think we've covered most of what's happening in the news.
Go Jays!
Go Jays.
World Series, baby.
That's right.
Yeah.
So thank you for watching.
Mhm.
We hope that you like, subscribe, and share your questions with us. And of course, we'll try to answer those questions in our other episode that airs on the weekly basis. So thank you. Hope you have a wonderful day, and bye for now.
Bye for now.